welcome back. Today we are talking about a pharma company that is beating the entire market right now, Torrent Pharmaceuticals. ये स्टॉक सिर्फ एक साल में 39% ऊपर गया है, while Sensex was in negative territory. So is this stock now a buy or is it too late? Let's get into the deep dive. First, let's understand the company. Torrent Pharmaceuticals, an Ahmedabad pharma giant, is a branded generics powerhouse. This company acquired JB Chemicals in January 2026 for roughly 12,000 crore and immediately became India's fifth largest pharma company, present in over 50 countries and the biggest Indian pharma company in Brazil and Germany. और सबसे important, 76% revenue comes from chronic disease treatments, meaning patients keep buying medicines from them. ये इस business का core strength है. Now, let's get into the numbers. Torrent reported revenue of 13,980 crore rupees in FY26, delivering a strong 21% year-on-year growth. In Q4 alone, revenue jumped 42%, primarily driven by the integration of JB Pharma. EBITDA margins also remained solid at 32.3%, reflecting the company's strong operating performance. Now, there's one important point to note. Net profit declined 22% in Q4. But don't panic. This was largely due to one-time acquisition-related and severance costs associated with the JB Pharma integration. The underlying business remains healthy. Excluding these temporary impacts, the core business delivered 16% revenue growth, placing Torrent among the top performers in the pharma sector. In short, short-term pain, long-term gain. Now let's look at where the growth is coming from. India delivered a massive 43% growth in the quarter. While the JB Pharma acquisition contributed significantly, the core India business itself grew 15%, which is more than 50% higher than the overall IPM growth rate. Brazil also posted an impressive 30% growth. More importantly, Torrent has 58 products currently pending approval with Anvisa, creating a strong pipeline for future launches and providing a solid growth runway. The US business grew 31%, although the market remains highly competitive. Unlike some peers, Torrent does not currently have exclusivity-driven launches to support growth, making execution even more important. Germany was relatively subdued due to supplier disruptions. However, management is actively addressing these issues and expects performance to improve as supply conditions normalize. We have to mention the Semaglutide angle. Semaglutide is the active ingredient behind diabetes and obesity treatments like Ozempic and Wegovy. On March 20, 2026, Novo Nordisk's patent expired in India, and on March 21, literally the very next day, Torrent launched two brands, Sembolic and Semalix. Torrent became the first company in India to launch an oral generic semaglutide, giving it a valuable first-mover advantage. By April 2026, Torrent had already captured a 38% market share, an extraordinary achievement in such a high-profile category. Looking ahead, the company also has a potential NASH drug in its pipeline, creating another avenue for growth in the metabolic disease segment. That said, the key risk is more than 40 competitors have already entered the market, making pricing pressure almost inevitable. The deleverage angle is extremely important because after the JB Pharma acquisition, Torrent's debt jumped sharply overnight. In FY25, net debt was just 2,345 crore rupees. By FY26, it had surged to nearly 15,000 crores. The debt-to-EBITDA ratio climbed from 0.5x to 2.8x, clearly entering a stressed zone. So can Torrent bring this debt down quickly? The answer is yes. CFO Sudhir Menon has stated that the company aims to repay the entire debt within 2.5 years. The cost of debt remains below 8%, and Torrent has four powerful levers to achieve this. First, it generates annual free cash flow of 3,500 to 4,000 crore rupees. Second, cost synergies from the JB Pharma acquisition are expected to start flowing in from FY27. Third, the board has already approved a 5,000 crore QIP if required. And fourth, JB Pharma's CDMO business and other non-core assets could be monetized. If management delivers on its plan, the debt-to-EBITDA ratio could fall to 1.8x in FY27 and below 0.5x by FY28-29. If that happens, the stock could see a massive re-rating. Technically, Torrent is in a very strong uptrend. It's trading above its 5-day, 20-day, 50-day, 100-day and 200-day moving averages. The MACD is bullish on both the weekly and monthly charts. But there's one warning sign. The RSI is showing a negative divergence. That means the price is moving higher, but momentum is starting to get a little tired. A short-term pullback is possible. Talking about valuation, the PE ratio is 64x. That's expensive. The sector average is 49x. The price-to-book ratio is 17.5x, while the sector average is only 6x. The analyst consensus target is 4,879 rupees, means there's still about 11% upside potential. Now let's look at both sides. The bull case, JB Pharma's integration has taken Torrent into a different league. It has a first mover advantage in Semaglutide, strong growth in Brazil, and just look at management's confidence. They've approved a 5,000 crore QIP to fund future growth. The pipeline looks solid. The bear case, integration costs are still ongoing. In Semaglutide, there are more than 40 competitors in the market, and a pricing war could be on the way. Germany remains slow, and the company doesn't have exclusivity in the US. And the biggest risk of all, the stock is trading at a 64x PE multiple. Any earnings miss could trigger a correction in the stock price. So this is a high quality stock, but no matter how good the business is, make sure you think carefully about your entry price before investing. This is a fantastic quality business, one of India's top 5 pharma companies, a leader in chronic therapies, strengthened by the JB Pharma acquisition and enjoying a first mover advantage in Semaglutide. That was my detailed analysis of Torrent Pharma. If you found it helpful, hit the like button and subscribe to the channel. See you in the next video and thanks for watching.